Hello and welcome to this week's Trades and Tutorials video. In this video, I am going to follow up on a previous video in which I said the market is really going to need to see some market rotation in order to keep this bull alive. Now, I'm actually going to show you a different way of looking at market rotation on an intraday basis. But before I do that, I want to give us a little bit of perspective on the daily chart. Now, before I get into everything, let's first make sure that if you're just finding us on YouTube, that please do subscribe to our channel. If you don't already realize it, we have many more videos like this at marketgauge.com/tutorials, and you can also find even more information by following us on Twitter at two different places, at Market Gauge and at Market Minute. And of course, make sure you're watching this video in HD by changing your settings in the lower right hand corner if you haven't already. Alright, so let's just get started. And while this is not a session about our real motion indicators that give us a unique way to look at where the momentum is in the market, I will point out that there are in our 6 modern family charts. And again, if you're not already following Mish on Mish's Daily, please do, because she explains her 6 key sectors that she looks at every day, or key ETFs that she looks at every day to figure out which way the markets are going. So in terms of market rotation, the idea here is you can see IWM has been struggling at this 120 level. Now it's just beginning to break out to the upside. The question is it really going to continue higher? Hasn't been an easy breakout, even though the Qs have managed to continue to push higher. So what do we really need to see this breakout happen? Well, the chances are we're going to need to see these IYTs break higher. Now this magenta line is the 10-day moving average, so the easiest way to determine that we might be breaking higher is to wait for that break higher. Now, how do we think, or why would we think that it might actually happen? Well, if we look down here at our real motion indicator, the blue line is a 50-day measure of momentum. The green line is a 200-day measure of momentum. And what you can see is that the blue line is actually over the green line. Now, that is not the case in the same extent as the moving averages of price themselves. This is the kind of divergence we look for in real motion to indicate that if the momentum starts to move higher, it's probably going to continue. So this is one area that I would watch very closely, IYT, for a move higher that would lead to a stronger belief that IWMs and the rest of the market can continue to move higher before we have some kind of a correction. Now, that same condition also exists over here in XRT. XRT is over the 10-day moving average, so if you know how to trade a market that's trending higher, then XRT looks like it's potentially providing some good opportunities right now with this breakout, with stops under this low, and with real motion in your favor. All right, now let's go to one other key chart. I said there were 6 charts. These are 3 of them, XRT, IYT, and IWM. The other 3 are SMH, IBB, and KRE. Now we can see here that KRE is really not cooperating whatsoever, unable to really break out of this consolidation here, and in fact yesterday closed lower. So despite its real motion being in gear, it's not cooperating and moving higher. On the other hand, IBB is a classic example of really what we're looking for. Real motion changed its position right here and continued, and the price action continued to move higher. So this is the type of pattern that we're looking for in those other charts. This is the 200-day moving average right here. So a break over that 200, explosive move higher. Real motion is confirming, or actually alerted us to this breakout of this major pattern. Could be an explosive one. It has been. All right, so IBB is where we want to look for some further market rotation as well. Right now, I said earlier in this video that I wanted to show you how to do this not only with our real motion indicators, but on a more granular level, such as intraday. So let's take a look at these same charts using a 30-minute opening range perspective. Now I've got them all here on one screen so we can see it really clearly. So as the market's chopping around from day to day, what you want to do is take the first 30-minute opening range high, and let me change my color here for you. Take your 30-minute opening range high and your 30-minute opening range low and mark them. So this is the IWM, and when IWM is breaking out or coming off the bottom, you want to look to see what the XRT, the IBB, the SMH, IYT, and KRE, and you might even throw in an energy like an oil, an OIH, because oil's been so significant lately, and see if they're all in agreement. Right now, Mish talks about this on a daily basis, but it also works on an intraday basis if you use that first 30 minutes as your frame of reference. Now, you can use this in two ways. The first is IWM and the market really going to continue higher? The answer to that is generally yes, if all of these other charts are doing the same thing. It's maybe if the leading charts at the time are doing the same thing. It's no if they're really not in agreement. Secondly, you can figure out which areas of the market you might want to be long or short based on which ones are performing. For example, yesterday when IWM broke to the upside, you can see that KRE didn't even get close. When IWM breaks down, everything follows it lower. The difference is that KRE never made it higher. So KRE is a great example of an opening range reversal on the upside to follow on the short side. The same thing you can see is true of IYT. Never really got going above that 30-minute level and fell like a stone. The other thing to keep in mind is that as IWM breaks down, what happens to KRE? It doesn't just break down to the low end of the range, it breaks the range and continues lower. So this is what a short looks like, and the flip side of this is IBB is what a long looks like. Right? So you can see the difference, huge differences, when you look at all these in terms of their 30-minute opening range. So if you'd like to see an example of how everything looks when it's going the way you'd like it to go, let's take a look at the 22nd. So if I go back to the 22nd of July, you can see, let me get there for you. Okay, so now we see the 22nd of July in all of them. You can see the IWM had a big breakout that continued higher. Look at how all the market indexes or all the market watch reacted to their opening range. KREs moved higher. IYTs moved higher. IBBs, well, they didn't move higher as violently, they stayed above. And XRT didn't move higher as violently, but stayed above. SMH moved dramatically higher. So every single one was doing the same exact thing relative to that first 30 minutes. All right, so this is just the tip of the iceberg, but as I said, it's a more granular way to figure out which way the general market is going to go and which areas of the market you should be focused on, long or short. Hope that helps, and I'll see you in the next video.